Happy Sunday to you. I'm Eric, and you're watching Eric's Crypto Corner. I'm a tax accountant with over 16 years experience in that industry, and I've been in the crypto space for about 5 years, GPU mining, ASIC mining, buying and selling crypto. Let's go ahead and get right into today's video. So in today's video, we're going to go ahead and get right into something I have to do with every tax season, and that is clients tracking their crypto sales, purchases, cost basis, fees, all that other good stuff. So that's what today's video is going to be all about. We're going to go through the steps of what programs you can use to track those details, and what I like to see as a tax preparer, an enrolled agent. I'm a tax accountant at tax time. So if you're having somebody do your taxes for you, you can go ahead and give them this information. So really there's a couple of different ways that you can track your crypto buys and sells. The easiest way, and this is the way I don't recommend you doing it, is to keep everything on a single exchange. If you keep everything on a single centralized exchange, that exchange will do all the heavy lifting for you. It'll record all your buys, it'll record all your sells, your costs, your fees, everything else like that. And it provides like Coinbase.com, Crypto.com. These platforms will provide you with a gain loss analysis at the end of the year, which is pretty nice. It's actually pretty close to what you would need in order to fill out your tax forms. Specifically in 8949 is where you would report your crypto gains and losses on. And if you do that, your job is pretty easy because you don't have one. The exchange is going to be doing it for you. Okay. The downside to doing it this way is obviously you're keeping all your crypto on a centralized exchange, which we don't advise. It's not something anybody in the crypto space is going to tell you to do. To keep your crypto on a centralized exchange, you have a very big risk to have something happen with your crypto. Again, I keep hitting this every video, is if it's not your keys, it's not your crypto. And if the exchange owns your crypto, yes, they will provide you with a pretty report at the end of the year that you don't really have to do any work on. But if they go bankrupt, reference FTX, reference Mt. Gov, other places like Celsius and so on and so forth, and you lose all your crypto, you're going to be pretty salty that you didn't just take the time to track these things on your own. Okay, so I've created this extremely basic spreadsheet here. You can do this in Excel, you can do this in Google Doc, whatever. So here we've just got our crypto ticker, the date you bought, how much you bought, the amount that you spent in dollars, your fees, and then we can actually, kind of like move this over maybe a couple and date that we sold. Okay. So when we look at our Bitcoin that we bought the other day, it was August 16th. So I'm going to go ahead and put that in here. So August 16th, 2025. And it was $5. So I can just put in here like BTC, you can put in Bitcoin. It doesn't matter what you do here. And the amount we bought was actually $4.75, and the fees was 25 cents. And we can even put in like a total, so we can kind of match up. So we can match up with Coinbase. Now the bought amount is kind of important, and this is where people really get hung up. Is if you're going to be buying and selling the exact same amount of Bitcoin that you bought and you sold, then this is very simple. But we do have to record the amount that you bought, which in this situation was not much. Point for $3. It was 0.3 with a lot of zeros in the front of it, 991. So let me just go grab this and paste it here. Okay. That's how much Bitcoin we bought, was 0.0003991, and here we go. All right. This is our recording of what we bought. All right. Now, we bought another one. I know that you won't see this on the screen, but the next day we bought $10 worth on Coinbase, which was a much larger amount of Bitcoin, but it was $10 and the fees were still the same at 25 cents. I'm going to do all the same stuff here. So we can go Bitcoin. This was on the 17th. Okay, we bought this amount. Our amount that we received was $9.75 and the fees were still 25 cents. Okay. So now this should match up with our Coinbase. So just by looking at these 2 days, you know, if we get like a, you know, we can put like a total down here or whatever. You can make your spreadsheet however you want. But our total invested, and I suppose we can, you know, even make our fun little dollar signs here. Okay, so this is how you need to track it from a very basic perspective. Now what happens is your cost is really, if we go over here, your cost that you've spent on Bitcoin so far is $15. But you've got some fees associated with it, so you really only have $14.50 of Bitcoin. So now let's touch on what happens if I were to sell this Bitcoin. All right. In a perfect world, what you do is you sell the exact same amount that you bought. All right. Normally this doesn't occur. Normally I do not see people selling all their stuff all at one time. Now, if you do, that makes it really easy for you and really easy for your tax person or whoever's doing your taxes, if it's you or whatever. But in this situation, let's just say Bitcoin, you know, let's just say it doubled for fun. And we're going to sell the same amount. Okay, so we can actually probably add a column here because we're going to have like a date that you sold it and how much you got. Okay, so we're going to go ahead and come over here. Let's just say we sold it today because today we're recording on the 24th. Okay, let's say we sold them both. Okay, and we're going to just take these amounts and we're selling the whole thing. This is easy peasy stuff here. All right, now today, I don't know what the value of that would be, but let's just, for argument's sake, just say that it was, I don't know, we'll call this $10 and we'll call this $20. Okay. Now, let's just say we also had 25 cents in fees to sell it at Coinbase. And so now we go ahead and look at our totals. Okay. I hope you're kind of getting how this is going to turn out. Anybody that's done this before. So from a bird's eye view, we can see that our cost was $14.50. That's how our cost was 15, but 50 cents went into fees, and $14.50 is what you actually got in Bitcoin. And now we've sold it for $30. So what is our gain loss on fees? So our sales, our gain loss is really just the difference between this and that. Okay. So in this particular situation, you just take this amount, subtract that amount, and you've made $15.50. Now we know that your cost was $15 total, but you can report these 50-cent deals in the fees field of your tax return on the 8949. So there will be some expenses that you can associate with the sale and the transaction fees of this transaction, but in short, your gain is going to be $15.50, and then we put in your fees, which equals that plus this. All right. So your taxable gain loss is just going to be this minus that. Okay. This is a very generic and unrealistic view of how you should be tracking your Bitcoin when it comes, or any crypto sale when it comes to the gains and losses. This is all good stuff up here, but most people don't do this. They do not sell the exact same amount that they bought. Okay. So we're going to get into how we track that next. So now let's talk about what happens when reality kicks in and you don't normally buy, and then sell everything all at one shot. A lot of times what I see people doing is either selling a portion of what they bought here or here into something else. Okay. So let's just say you sold not 0.3991. Let's say you sold 0.1991. All right. And then that was it for that day. You just decided to take a little bit off the table. You're like, oh my gosh, Bitcoin's going up. I just want to sell a little bit and make some profits here or something. All right. Well, now we have to figure this out a little bit differently. Okay. So now what we have to do is we have to look at our cost basis differently, because your cost is still 475, but we have to figure out your cost basis on what we sold here. So cost basis is really just what you paid for the asset minus the fees. Okay. So when we look at this, we sold 0.1991. Well, what we have to do is figure out how much of this is percentage-wise to that. And what we see here, and all it is, I just took this and I divided it by that. Okay, so what we see here is we're selling 49.8%, and we can even make this a percent thing. I guess it's rounding to 50. I think I can move this over a little bit. Okay. So we're selling 49.89% of what we bought. Okay. And maybe it sold for $4. And maybe still the 25-cent fee. We're just going to leave that alone. All right. Now our math is going to change a little bit, so I'm just going to get rid of all this stuff down here. Okay. So now we sold 49% of what we bought on the 16th. We sold it for $4. So now what we need to do is really take these numbers and multiply it times this. So what we look at here is our cost basis then isn't $4.75. Our new cost basis is the 475 times the 49%, right? So that's our new or updated cost on the amount that we sold. Same thing goes with the fees, right? So now we're going to take our amount here, the percentage, multiplying it times the fees. So your fee cost on the amount that we sold was actually only 12 cents. And now we can figure out the gain and loss just like we did before. So all we're going to do is take our selling price minus the new cost basis, and that means that you made $1.63, and that your fees in this case were that minus this. Okay, so you would be putting this part on your tax return that you bought. Really, this much crypto for 0.1991 is what you bought and sold of this amount. Okay, so you're going to be putting, oh, well, I bought $2.37. Even though there's not a separate transaction, there is no individual transaction that you spent. What is this? I hate doing math. You actually spent $2.49 on this sale. And I hope that kind of makes sense to you, because this is where most people get all flubbed up. They just look at, well, I bought this and I sold some, but I didn't really track everything. And this is really what you need to be doing, because you didn't sell all of it. That's the whole point here, is you still have this minus that. You still have this amount. If I move this over, oops, wrong way. You still have this amount of this original purchase that you haven't sold yet. You've only sold 49% of your original purchase here. Okay, now a couple tips here in regards to what is taxable? What do I have to record? What do I not have to record? Any kind of transfers that you do from one wallet or one exchange to another, you do not have to report that on your tax return. That is not a taxable transaction. When you move funds, that is the same crypto. So if you move Bitcoin from Coinbase to Exodus, which we did in a wallet or a video just recently, not taxable. Okay. If you move from a hot wallet to cold storage, not taxable. If you cycle it all the way back and go back to an exchange, not taxable. All right, anytime you move stuff, not taxable. Now, anytime that you sell stuff, taxable. And we're talking about United States. I'm not talking about the tax-friendly countries. I think like Portugal and some other ones don't do any kind of taxes on crypto trades. I'm in the United States. That's what we're talking about here today. If you're in another country, obviously none of this, stuff really pertains to you in terms of, how your country taxes it. I don't know how other countries tax it, and I don't want to know. Okay, I have enough to deal with in the United States. So, with that being said, this is a United States only, particular video on how to keep track of your stuff. And when we're talking about selling, yes, we just went through that on how to record the sales. Now, selling is also swapping or converting. So if you ever convert your crypto from Bitcoin to Solana or Bitcoin to XRP or Ethereum or anything else, that is a sale. So even though you're not converting it to US dollars and then it sits in US dollars and then you buy again, it doesn't matter. The crypto industry has taken out that middle transaction. So you can just go from one crypto to another. In a stock trade, you have to sell it from a stock to a cash position, and the cash position then you use to buy more stock. Okay. Crypto just eliminates that middle transaction. It just says, well, we can skip the cash and we can go right from crypto to crypto. Okay. But that doesn't mean it's not taxable. So every single swap that you're doing on Coinbase, on a decentralized exchange inside of your wallet, that needs to go on this spreadsheet because that is taxable. Okay. Now we're going to talk about a little bit more advanced way of tracking this. Now, I'm an accountant. I have access to certain tools out there like QuickBooks and QuickBooks Online. There's Wave. There's Zero. There's some other probably free stuff out there that I'm not even listing in this video. But if you wanted to track those transactions in that software, that's actually how I do it now. I just think it's a little bit easier to figure out a gain loss, especially if you're doing stuff regularly. If you're buying and selling regularly, that would probably be a fairly good investment for you to spend, $10 a month for like QuickBooks Online for the basic version. They used to have a really cheap version. I don't know if you can get it anymore. Maybe it's like $30 a month online. But there's some softwares out there that you can plug these buys and sells in, and it'll just automatically calculate your gains and losses for you. Okay. I'm not going to get too crazy into that, but I can bring up what I have here. Okay. We are using a QuickBooks Desktop product here. You can use whatever you want. Should be very similar to what we've got cooking here. I've just got a little balance sheet showing all of our assets, and obviously cryptocurrencies are assets. What I've done is I've broken them down by wallet. So you can see we have Coinbase, Ledger, Tangent, Trezor. Obviously I am not super loaded here. I've been just investing a little bit over the last few years at a time, and I stupidly sold out at a low when Bitcoin was like around $23,000 to $24,000. So most of my gains were lost because I sold way, way, way at a wrong time. Lesson learned. We all have lessons, right? At any rate, what I've done is I've created separate assets on the balance sheet here. So for all of you accounting dorks like me, we've just created different cryptos on different sub accounts for each basically cold storage or hot storage here. And then as buys are occurring, I'm just recording those buys as a debit and credit, inside of QuickBooks here. Now, USDC, we can double click on this and we can see, you've seen that I'm a $20, kind of a weak guy this last few months. And so I'm just buying, $20, $10, $85, whatever, of USDC. And then what did we just talk about? Then I swapped it to Bitcoin. So I'm swapping some USDC to Bitcoin. And just so you know what these look like, these are just journal entries. So anybody that's familiar with accounting or took accounting 1 in high school or college or whatever, we're debiting our crypto that we're getting and we're reducing our cash position. And so you can make this whatever you want. Obviously, I'm kind of running it through a small business here that I have. But if you want to do some kind of other equity or cash position, whatever you want to do here, I'm just using an equity position. All right, so I'm increasing my crypto $20. I'm decreasing my cash $20. All right, so it records all of that for me. And what I really like about this is I can just see at any given time that this wallet should look very similar to this. And I can easily also bring up my wallet on my phone or on my tablet or whatever. And I can say, well, geez, I can quick eyeball it and see, well, what's my Solana worth? Well, my Solana actually is like at $500 some right now in current market value. So I can see my cost is $255. So I can easily identify, well, geez, if I wanted to sell this today, I'd be making a couple $100 there. Sui, I'm down on. Like, I think it's worth like $120 or $130 right now. And do I want to take a loss on that? I don't know. Do I not? But I can make those decisions very quickly just because I see what my cost basis is right on a computer screen. It is. I don't have to look in and do sums and mess around with the spreadsheet and anything else like that. I can quickly look and see what my total investment is on any given, crypto at any given time. Now, I'm sure you can build your spreadsheet to be extremely complicated and complex and do all this for you behind the scenes, which is great. I just don't have time for that. So, that's why I use a product that I already have access to do this. Now, what's nice is here's an example of a sell. So what I have here is I just have a sell. I sold all my Cardano except for one. I left one Cardano in the wallet, which conveniently is right here. And now it's worth 90 cents or something. And here's what I got in USDT because I just swapped it to a stable coin. I was going to do something else with this. I was going to do some bot trading or something. And since I've kind of changed my mind, but it's on USDT right now. And this is my gain. So my cost minus my, what I received in cash is my gain. Now there is probably a fee in here. I could have put a bank fee in here 70 cents or something. If I wanted to be 100% accurate on my tax return, that's fine. I may come back in here, and adjust that as needed. But for right now, my quick and dirty gain on this is, I made $12 on Cardano. Okay. So I just wanted to give you an idea of what QuickBooks Desktop, this is what this is, would look like for you to track your crypto. You can do the same thing in online and other products. It's just a lot easier to figure out your gains, losses, anytime that you swap or convert to US dollars. Now, I know that some of you may be saying, there's got to be an app for this. Okay. And there is. There are several apps out there that I'm going to put on the screen now for you to check out. I personally have never used these apps for two reasons. Number one, I don't want an app connecting to my wallet. I just don't. I don't want anything connecting to my wallets. I want my wallets completely secure and not connected to any kind of contracts that are out there or any kind of third-party apps. I do not want my crypto being intercepted or interacting with a bad actor in this space. And so that's one of the big reasons why I just refuse to connect any of these third-party apps that may track the gains and losses and buys and sells and whatever. I refuse to accept that as a solution because crypto by default is self-custody. It is trustless. You are supposed to be managing this on yourself. And if it sounds like I'm on a soapbox here a little bit, I am. Because if you're in crypto, then you should be doing all this stuff on your own. Okay? This is all about independence and freedom. And for you to have that independence and freedom does require a little bit of work on your end. The second reason that I don't use these apps is because most time they're wrong. I've seen clients use these apps time and time again, they do not get the accurate numbers for them at tax time. And I tell them to go back and redo all of it. So all this stuff that they were trusting, a third-party app to do, either they don't cross-chain, which means that maybe you moved something from the Ethereum network to the BNB network or to a Avalanche network or whatever, and then all of a sudden it just disconnects and it doesn't know what you're doing from that point forward, and then it reconnects when you've moved that crypto to another chain that it might support. Now, maybe things have gotten a lot better over the years, but I've never seen a client show up to me and say, this is my gains and loss report for my third-party app that I used, and it is perfectly exactly on. I've never seen it happen because people that are using crypto oftentimes go down the rabbit hole and they are going all over the place to different exchanges and different wallets and different third-party apps. And whether you're using a decentralized exchange like Uniswap or PancakeSwap or whatever, I know I'm throwing a lot at you right now, but at the end of the day, trust yourself. Okay, trust yourself. Just do a little bit of work. Unless you're day trading, then you should have it all on Coinbase One or whatever it's called. Track your own stuff. Make sure that you can support an IRS audit so that if you put something on your tax return, you have complete confidence that you can go back and track it and prove to the IRS and the state that you're living in, if you have state income tax, that you reported correctly. Okay, I really hope that today's video helped you out. Learn how to track your buys, learn how to track your sells, and learn how to track your gains and losses. For those of you who are okay using Excel or a Google Sheet, I start with that first. Go ahead and go down that road. And if you're not doing a lot of buys and sells, that is totally fine. Okay, a couple here and there, not a problem. If you're a nerdy accountant like me that wants to have software do all the math for you so that you don't have to figure out, what was my gain, what was my loss, maybe you selected a wrong cell, accidentally, then go ahead and try like a QuickBooks Online, a Wave, a Xero, something like this. And there's probably other FreshBooks and whatever else that's out there. All right, so I hope you learned something today. If you have any questions, and I'm sure there's going to be, please post them in the comments below. If you know anybody that would benefit from this knowledge from this video, please share this video with them today. Okay, as usual, this information is for educational purposes only. It is not financial advice. Until next time, peace.